Hello, everyone, and welcome back. My name is Greg Furman, and this is the VantagePoint AI Market Outlook for the week of December the 30th, 2019. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. However, just a reminder to everyone, we are in holiday thin markets, and very often the price is not what it appears to be as real money starts to come back into the market into the first and second week of January. So when we're looking at the dollar right now, dollar coming under heavy selling pressure on Friday to end the week. But again, this price is unlikely to break through the verified support low at 96.29. Now we are showing further weakness in the dollar here, but again, in thin illiquid markets, we want to be very cautious about aggressively selling US dollars down in this 96.29 area. I would suspect the dollar is likely to start to recover down in that area. So we want to watch the Vantage Point indicators very closely as we move down into those levels. Now, to finish the year, the S&P 500 has made some very solid gains here, partly to do with the U.S.-China trade deal that's coming, the new NAFTA agreement, but just general demand for equities going into year-end has been very, very strong here. When we look at the VantagePoint software and how they've handled this volatility in the market, we can see that this strong buy signal started to form in October of 2019. We had a significant corrective move, which tricked a lot of market analysts into thinking that there was going to be a big sell-off. Myself included, I thought that we would have a deeper correction than this, but we didn't. We recovered. Our triple AMA cross did not complete. We immediately moved back over our T cross long, and the market accelerated to where it currently is now. Now, what we can assess from the current equity markets is that we've got a medium term crossing our long-term predicted difference. Our neural index is down, and we are in a heavily overbought condition. But we've been in a heavily overbought condition here, guys, for literally months. So I'm not sure I would ever rely on an oversold or overbought indicator in this particular case, because the inner markets that are driving the S&P 500 are very strong, and until those inner markets start to give up some of those gains, then the S&P 500 will also hold those gains. So for next week, going into year end, I would be watching this 3189 area very closely, and I do anticipate we will test that level. Now, when I look at light sweet crude oil, again, a very high intermarket correlation to the equity markets. We are getting very toppy up here in and around this 62, 61.40 area, and you can see that we're starting to stall right in this particular area. So we want to be a little bit cautious about buying up here. If we're going to remain with the primary trend in buying the equity markets or buying the light sweet crude oil contracts, we want to let this thing pull back a little bit before we think, because again, both are a little lofty for this time of year. Now, surprisingly, gold has made a big move up here, but again, we have discussed this in a number of the previous Forex weekly outlooks, where I'm saying that we have this heavy support level down here and very little has changed around 1453. Unless we break down below 1453, then gold is still predominantly bullish. Now, we are moving up to a very powerful verified zone up here around 1525. So gold will have a formidable adversary with this verified zone to see if it can break through. But again, with everything with a risk-off environment here, it's unlikely that gold is going to break through 1525, 1530, excuse me, but it is possible going in towards the middle of January. Now, the reason I say the middle of January is that we want to let everybody come back in. Everyone's on vacation going into that first week of January. So the second week of January is far more important. So I would anticipate that gold would stall out here towards that, the first and second week of January as the dollar starts to recover. We know that the dollar is usually strong in the first week of the new month. So we'll be watching that very closely. But if we see any dollar strength, that would likely push gold lower, not higher. Now, as we move into our main Forex pairs going into, again, the year end, a lot of debate over the Euro-US pair. But again, here, guys, what we have to remember is when we look at these verified zones and this major resistance up here, the Euro, just to just to be clear and to point this out, the euro did not trade to these particular levels. That is a data issue that I've seen here, but with bar charts. So again, if you're in your VantagePoint software, just remember this bar did not actually happen. So when we look at the additional indicators, this level of resistance up here is still holding, and that level is coming in at or about the 112 level. We haven't broke through there. The euro does look mildly bullish here, but again, the euro still firmly below the yearly opening price and is unable to gather any kind of real momentum. When we look at the closer at the additional indicators, our predicted differences are rising. Our MACD looks good, but again, we have to assess when real money comes back in if this is a true move or not, and that will be the major question here. Now, with the Euro US counterpart, the US Swiss franc, the US Swiss franc has made a big move down in Friday trade, but once again, the Swiss franc is not a currency that real money wants to hold. The interest rate differential between the Swiss franc and the dollar heavily favors the US dollar versus holding Swiss franc. So I would anticipate the low area down in this 97.14 area is likely to hold going into the new year. So potentially some very good opportunity there on a reversal on this particular pair, but we want to see those equity markets hold gains. Right now, the indicators in Vantage Point have moved firmly into oversold territory. We're at 11.1 on the predicted RSI. That absolutely does not mean that this pair is going to absolutely turn around and go higher, but the probability is very high. I would watch this area between 96.59 and the 97.14 area for potentially a very good long trade. Now, with the pound dollar has been recovering here, guys, but again, Brexit is not really resolved. We still have to, the new administration or the conservative government in the UK now has to come up with a trade deal with the EU within a 1 year period. So again, I don't think that that's going to be a very easy task. We do have a buy signal with a medium term crossing the long term predicted difference off this verified zone that formed at the beginning of the week at the low around 129.05. So we still have good strong buying down in this particular area, but we need to hold above 130.43 if the pound has any chance of returning to the previous high up in this 135 level. Now, with the dollar yen, very much an equity trade here, guys. The benefit of the verified zones is that it points out very, very strong support and resistance that's based on price action only. So when we look at this, we've had multiple failures at 109.78, but we can also further assess that the market is holding above the T-cross long at 109.30. So going into year end and into the first week of the new year, we're looking for the dollar yen to hold above the 109.30 area. If we can't hold above that level, then obviously we're going to have a problem. So we'll continue to monitor this right now, but the indicators are not overly bullish on this particular pair. So if nothing else, a corrective move is, in my respectful opinion, imminent. But the question is, will the trend reverse? We would need those global equity markets selling off if the dollar yen is to fall. Now, as we move into our three main commodity currencies, the Canadian dollar strengthening on gold prices, oil prices, equity markets moving higher. These are the main drivers behind this sell-off. Now, again, we're coming into a very strong support level down to the 130. The likelihood that this pair moves lower for the first couple of days into the new year and then turns around is very, very high. Real money, in my respectful opinion, is likely going to be on the move to buy dollars into January 6th, January 7th. So we'll watch this area down here, but right now the indicators from Vantage Point are clearly pointing that we're moving lower. Now, with Aussie US and New Zealand US, they've made some very strong gains in the last week or so. We pushed through the verified zone that we discussed in last week's Forex Weekly Outlook, but we have an even bigger resistance zone up at this high near 70.81. We have the yearly opening price at these just below these levels. So we're again, we're also moving into an extreme overbought condition. So if nothing else, I would anticipate a corrective move back down to 68.95, the T-cross long. which we can then reassess if we want to continue to buy this or if we want to look to short this. But again, it would take a pretty significant move in gold for the Aussie US to push through this high near 70.81. But again, when we start to move into these red zones, that represents the potential for a very strong short. The same with New Zealand US. New Zealand US is moving higher, but again, when we back our Vantage Point charts out here, we can see that it's not a free, there's no free lunch here, so to speak, guys, and we've got significant resistance coming in at the high at 67.89. Very strong close on Friday, but again, I think we're seeing profit taking. People are a little shy to buy US dollars. We've got the impeachment trial, maybe, maybe not. I don't know if that's going to go through or not, but there's still some risk off scenarios there that could take hold as we go into the new year. So we definitely want to wait and be patient and be very particular in what we trade. So with that said, this is the Vantage Point AI Market Outlook for the week of December the 30th, 2019.